Good morning everyone. This video presents a money laundering involved GISB Holding Sdn Bhd, also known as GISBH. The case was reported by Senior Harian and involved more than 40 million ringgit in suspicious financial transactions. According to media reports, funds linked to GISBH were illegally channeled through multiple bank accounts and related business before appearing as legitimate business income. Following the investigation, authorities reportedly denied several individuals linked to the organization for future inquiry as part of ongoing enforcement measures. Next, I will explain how money laundering activity carried out. Based on the report, the organization was linked to several business entities operating in different sectors, including retail, tourism, and childcare service. Although these businesses operate legitimate, they were allegedly used to facilitate the movement of large sums of money. The first inference identified in this case is the placement stage of money laundering. Large amount of money, exceeding 40 million, were deposited into multiple bank accounts linked to individuals and companies associated with GISBH. This theory indicates how illegal funds were first introduced into the formal banking system. The second inference is the layering stage. The funds were transferred repeatedly between related businesses such as supermarkets, travel agencies, and childcare centers over a prolonged period. These complex transactions were intended to conceal the origin and ownership of the money.
The third inference identified is the integration stage of money laundering. At this stage, the funds appear legitimate as they were used in normal business operations and daily expenses. This made the illegal proceeds difficult to distinguish from lawful income. In addition to the three stages of money laundering, this case also demonstrates significant red flags from a banking perspective. These include large transaction amounts, multiple bank accounts, related business entities, and transactions conducted over several years. Under Section 4(1)(b) of the Amlati FPUAA 2001, the accused were charged for receiving and transferring proceeds of unlawful activities. From a banking perspective, Section 14 of the Amlati FPUAA requires banks to submit a suspicious transaction report or STR to Bank Negara Malaysia when reasonable suspicion is identified.
Next, I will explain the steps that banks follow to file a suspicious transaction report or STR under Section 40 of the AMLAF PUAA 2001. The first step in creating an STR is to identify suspicious transactions. These include transactions that are inconsistent with the customer profile, unusually large amounts, or repeat transfer between related accounts. The second step is to fill out the STR form completely. The information that needs to be entered includes customer details, account, transaction amount, date, and the reason why the transaction is suspected to be suspicious. The third step is to send the STR to Bank Negara Malaysia. This report must be sent as soon as possible after a suspicious transaction is detected for future action. The fourth step is to retain or record and supporting documents. All evidence of transaction and related documents must be retained for at least 6 years for future investigation reference. The final step is to ensure there is no tipping off. Banks are prohibited from informing customers that an STR has been sent or that they are being investigated in accordance with Section 16 of the AMLAF PUAA 2001
and Section 17, which requires proper record keeping. In conclusion, the GISBH case highlights how money laundering can occur through legitimate-looking businesses over an extended period. This emphasizes the importance of strong banker-customer relationship and strict compliance with AML regulations in protecting the financial system.